Morning, Seafree in Chicago with the morning grain news. Well, we have most of the markets up with soybean oil gaining on soybean meal. Stock market's higher. The dollar is sharply lower. Crude's higher. The metals are higher, and most soft commodities are also higher. Hogs had a big turnaround, higher close outside day on Friday. As far as the news overnight, again, I think a lot of our markets, especially wheat, was following the sharp sell-off last week in the stock market. And I think that the weaker dollar might be helping commodities today. Wheat market also is facing harvest. And I think that there is going to be some rain, partly in West Texas, Oklahoma, eastern Kansas. I think that for the wheat crop, it's a little bit late to help the overall crop. And so I think the wheat market's also trying to figure out how the world is going to satisfy global demand with Ukraine not shipping wheat, with Russia only shipping out a small quantity of wheat, Europe unable to ship wheat, and still have some problems next week. Rains returning to the U.S. spring wheat and Canada eastern spring wheat areas. Over in the corn, kind of in a trading range. Last week we tested the lower end of that trading range. Overnight we're a little bit higher. I think that the Midwest forecast for some rain this week is going to slow planting. Again, the market's expecting demand to shift away from Ukraine and South America and help increase U.S. exports and lower our carryout, which should be supportive to the corn market. We really need a weather problem to push corn over the 820 area on the July. Our weather guide this morning is kind of disheartened, I guess, a little bit in that he went down the road of a dry U.S. Summer. And right now, with all these rains, it's kind of reducing that chance. Right now, he's still looking at an analog year back in the mid-1950s in which actually dryness did occur in the middle and late part of the growing season, but it was mostly in the western corn belt and not in the eastern corn belt. I still think, though, that corn prices will eventually trade over that 828 resistance area because of the higher demand. Over in the bean market, we traded over $17 and closed over $17 on Friday because of increased demand. U.S. April combined usage was record high. And I think that with Brazil out of the export market April 1st and more crush demand with positive margins, we continue to reduce the U.S. soybean carryout. A lot of people are at like about 190 carryout for the old crop versus the government's 235. And then if we see even a little bit more acres, we're still looking at the possibility of a carryout for 22-23 at 200 versus the government's 310. And I think that's supportive. Next objective on the July beans is the $18 price level. So we're kind of watching any news out of Washington concerning inflation, interest rates, anything that weather-wise is going to impact the U.S. 22 crops, and anything concerning the war. As always, these are my thoughts and not those of ADM or ADM Investor Services.